You're watching Money Talks with me, Oscar Sabakti. Coming up on the program, Donald Trump announces more trade tariffs. The AI chatbot wars heat up, and how the city of love and light is dealing with a housing shortage. We begin in the US, where President Donald Trump has announced his intention to impose more trade tariffs, this time on vehicles, semiconductors and pharmaceutical imports. In the latest in a series of measures threatening to upend international trade, Trump said he would hit car imports with 25% levies and similar duties on medicines and chips. They could come as soon as April the 2nd, a day after cabinet members are due to recommend options for a range of import duties. Trump added that he wanted to provide some time for drug and chip makers to set up US factories so they could avoid the proposed tariffs. Major export stocks in Asia declined on Wednesday following the news. Let's get more on this now with Sunil Pashakwale. He's a professor of international finance at Cranfield University. Really good to have you back with us, Professor. Donald Trump really is doubling down on his tariff threats. This time he's proposing to hit the auto, drug and chip making sectors. What impact will these tariffs have on those industries if he goes ahead with those plans?
Well, first of all, thank you for having me. Good to talk to you again. Well, first of all, let's remember that this tariffs is not surprising thing at all, because way back in 2018-19, he had imposed tariffs well in excess of $350 billion, particularly on Chinese goods. And what is interesting to note is that the Biden administration retained most of those tariffs. They did not change it. And if anything, in May 2024, they actually increased further $18 billion worth of tariffs on Chinese goods. So there were more trade war tariffs collected under Biden administration, estimated to be about 175 billion compared to Trump administration. But having said that, clearly this is going to have a significant impact on exports from China, Mexico, and Canada produce the products that they have been selling to the US. Steel, for example, will have to be sold by the Chinese manufacturers to other markets. That might actually benefit other markets in terms of lower steel prices. But as a whole, this is going to have a short and long-term impact on the output and the employment opportunities in these industries, which are going to be directly affected by the tariff imposed by the US administration.
Now, Trump's tariffs are a key aspect of his America First policies. He says he wants to boost America's economy by bringing manufacturing back to the US. Do you think duties and tariffs are the way to go about doing this? Will they have the desired effect for the US economy?
That's a very good question, actually. Well, his main concern has been to reduce the surplus trade deficit that some countries like China, Mexico, and Canada have had with the US. And so by imposing tariff, he hopes to kind of give more opportunities to US manufacturers and US producers to be able to sell their products within the US market, as well as being able to, give them a chance to sort of compete internationally in the international market by exporting their products. However, historically, and as well as academic research and government studies actually have shown that tariffs do not necessarily, achieve those objectives. If anything, they raise prices and may actually lead to reduced output and increase unemployment in the long run. So that might have as a total, that may have a negative impact on the U.S. economy.
Yes, let's talk about the inflationary effects because we know Donald Trump campaigned heavily on bringing down the cost of living for Americans. But many economists have warned that tariffs might actually increase prices in the short and longer term. What's your view? Do you think we'll see higher prices in the US should Donald Trump continue with this trade war?
Well, again, I mean, historically and anecdotally, as well as academic research, has shown that trade barriers reduce economic output and income in the long run. So tariffs do not necessarily help. They are against the very idea of free trade or open market competition, as we know. Um, Now, obviously, if you impose tariffs on imported goods and services, that is going to definitely increase the prices of those products within the US. For example, semiconductor products or drugs, as your report mentioned. And so the US consumers may have to actually pay higher prices for those products because historically those were imported and benefited the US consumers. Now, tariffs could also reduce the availability of goods and services, reduce employment, and lower economic output. And in fact, if this tariffs, in terms of greater increases in cost, gets passed on to the producers and the businesses, then they'll have less incentive to actually invest, in future because that might increase their cost of parts or cost of material, which would eventually lead to increased prices of goods and services. So income for both owners of the capital as well as people who work in the industry is going to be affected adversely. Now, the other thing that could happen is that it may put upward pressure on the US dollar, and that might offset to some extent the increased cost. But that is not going to be helpful for the US in the long run, because if you think about it, if stronger US dollar is going to hurt US exports, and it might actually work perversely against the very goal that Trump is trying to achieve, that is trying to reduce the trade deficit with other countries.
Okay, Professor Sunil Poshakwali, we'll have to leave it there, but it's great to get your thoughts as always. Thank you. Now, the AI industry is continuing to see rapid advancements. Elon Musk's xAI has just released its Grok 3 model, claiming to deliver superior performance while addressing economic considerations. Following the announcement of its new chatbot, xAI's valuation surged to $50 billion, reflecting strong investor confidence in its AI innovations. Early users say Grok 3 distinguishes itself with advanced reasoning abilities, outperforming rivals such as OpenAI's ChatGPT and DeepSeek's R1 in various areas. The introduction of Grok 3 signifies a shift towards more cost-effective AI development. xAI says with reduced training expenses, the technology will be more accessible across different sectors. Let's cross now to tech and cybersecurity expert Ritesh Kotak. He joins us now from Toronto. Really good to have you back with us, Ritesh. The AI wars really are heating up, aren't they? So we've now got Grok 3 available to premium users and others. In your view, does xAI's offering really deliver on what it's promising, superior performance to its rivals?
It does. And in fact, there was a fantastic example given because one of the big criticisms around the competitive AI models is its inability to properly reason or think or be creative. And there was a fantastic example with Grok where it was prompted to generate a new game using Bejeweled and Tetris principles. And it actually developed it and it wrote the code where you could literally copy and paste the code and the game started working. And it just went to show the creativity component that is built into it. And that is one of the highlights that Elon Musk and his team has been parading, is the ability to just have advanced reasoning, which is just not in comparison to its competitors.
And we know that artificial intelligence technology really consumes a lot of time, it consumes a lot of energy, and therefore it costs a lot of money. We've heard companies say they're spending billions on developing the technology, but at what point will we see this technology advanced in a more cost-effective manner? Are we seeing that now, in fact?
We are seeing it. And in fact, that just recently there was the AI Global Summit where there was a lot of talk around renewable energies and also new ways of creating sustainable models. I think for most of us, we kind of go on an app and we put in a prompt and we get an output, but it's important to understand the resources that are required to give you that output. There's physical resources such as data centers that are required, chips that are required, physical infrastructure, there's intellectual property as well, the time to develop. And before it was billions of dollars, literally football fields of servers that are required and just years to develop. And now we're seeing that time shortened, just like we do with any other technology. So as the technology becomes more readily available and becomes that much more sustainable, what that means is it's going to come faster to the market. We'll see more advancements and it's going to get a lot cheaper.
Yes, and we are seeing the relatively rapid advancement of this technology, aren't we? Initially, just a couple of years ago, it seems, it was ChatGPT that seemed to have dominated the market. And since then, we've got the likes of China's DeepSeek and, of course, xAI's Grok. Are we going to continue to see these companies essentially leapfrog in terms of their innovation? And at what point are we going to see those advancements plateau, do you think?
I don't think we're going to see these advancements plateau. There's a lot of very interesting technology coming around the horizon. We still haven't even touched the ability of quantum computing and just high performance computing that's going to really shake things up. We're seeing the way AI is now being integrated into just about every facet of life, from finance, healthcare, retail. So there's a lot of work that still needs to be done. Obviously, there's this big talk around regulation that's happening globally. How do we police this? Should we be policing it? We're seeing different players getting into the space. China with DeepSeek recently. India is looking at developing technology as well. Europe is now in the race. So I think what we're going to see is when there's more competition, when there's more availability, we're going to start seeing features and processing and just net new innovations that we just haven't seen. So do I think the technology is going to plateau? I actually don't. I think it's actually going to be accelerated.
Okay, Ritesh Kotak, we'll leave it there for now. Thanks you so much again for joining us on the program.
Thank you for having me.
Donald Trump's recent comments and upcoming meeting with Russia's Vladimir Putin have raised doubts over the US's continued support for Ukraine. As a result, Europe is facing increased pressure to fill the gap. This uncertainty contributed to European markets reaching record highs on Tuesday. European stock markets closed higher on Tuesday, with the Stoxx 600 index rising 0.32% to a record 557 points. Germany's DAX was up 0.2%, also hitting an all-time high, while Italy's FTSE MIB 30 gained 0.59%. The rally was largely fueled by a surge in defence stocks following a renewed focus on military spending at the Munich Security Conference. This shift in policy has notably benefited European defence stocks, which have rallied sharply since Trump's inauguration mid-January. Investors are closely watching developments in the Ukraine-Russia conflict, including talks about a potential peace plan. As a result, the Stoxx 600 Aerospace and Defence Index, which had already hit a record high during Monday's session, rose another 0.8%. While several defence stocks saw significant movement, Polish defence equipment maker Lubawa saw a 14% surge. German defence manufacturer Renk Group gained 2.7%, French company Thales rose 2.33%, and the Swedish defence firm Saab increased 1%, while the German arms maker Rheinmetall saw a slight dip. After years of supporting Ukraine in its war against Russia, the US is now changing its tone. President Trump has floated the idea of getting billions of dollars worth of resources from the war-torn country by accessing Ukraine's mineral wealth. How will this benefit the US? Emre Boz has the details.
Thinking like a businessman is second nature for President Donald Trump, from operating hotel chains to owning golf courses. He's spent almost his entire career managing a billion-dollar fortune. The same instinct is now leading him to use the same tactic he's familiar with in the world of politics. He's reportedly said he wants 50% of Ukraine's mineral resources in return for providing security guarantees for peace between Moscow and Kiev. This came just a week after he said he wanted $500 billion of rare minerals from Ukraine for continued support. But Ukrainian President Volodymyr Zelensky doesn't seem reassured on this security guarantee.
To do this, I told President Trump we want to sign an agreement. But when we got to the details, there are still no guarantees of safety. And security guarantees, they should somehow be outlined, at least in this memorandum.
Ukraine is rich in various minerals ranging from beryllium, titanium, graphite and lithium. But currently, China is dominating the global rare earth mineral market with around 60 to 70% produced in China and nearly 90% of its refining capacity. This has pushed Europe and the US to look for new resources elsewhere as they invest even more into cleaner technologies. Titanium and lithium minerals play a crucial role in the green transition, important components used in the production of electric vehicles.
Ukraine is believed to have one of the largest reserves of titanium in Europe. Now, Ukrainian businessmen are pretty keen to work with Americans in this sector. However, many of them express skepticism that American companies may not come here in the absence of security guarantees.
Lithium is a key mineral used in batteries to power electric vehicles, and titanium, as a part in EV cars, reduces their outer weight and prevents overheating. As the US scrambles to acquire these metals, it's hoping to guarantee supply for its domestic EV production. Currently, it's falling behind its main rival, China. Worldwide, EV sales is being dominated by Chinese EV car maker BYD at just over 4 million units sold, followed by Tesla, then China's Wuling and Geely. But these minerals are not just important for EV production. They are also used in aerospace and defense, the construction sector, and used in power generation for nuclear reactors. And as Trump pursues his America First policy, the move to strike a deal with Ukraine may mean increased domestic production across the board. Emre Boz, TRT World.
Meanwhile, the UK government has announced a multi-billion-dollar plan to boost the UK steel industry, while President Donald Trump's plans for tariffs loom. Tulay Kalyon-Hasnadarolu has the details.
The UK government rushes forward a more than $3 billion investment in the UK steel industry as Donald Trump prepares to impose 25% tariffs on all imports of steel and aluminium into the US. The UK Business and Trade Minister Jonathan Reynolds says UK and US have a mutual interest. They could negotiate on an exemption from President Donald Trump's plans for the 25% import tax, which could come into force in March. But previously, President Trump said there will be no exceptions or exemptions. In 2024, the UK steel industry fell by 29% from a year earlier. In 2023, the UK steel industry contributed $2.2 billion to the UK economy. And the UK steel sector directly employs 33,700 people. But Port Talbot in Wales already cut 2,800 jobs last year, and another 2,000 jobs are at risk at Scunthorpe. Now, the government promises support for the steel industry and launches a consultation on its plan for steel. But critics say action is needed now. The opposition is calling on the government to take a tougher stance and negotiate directly with Washington. With the clock ticking, all eyes are on Downing Street and the White House. Will Britain secure a deal, or is the UK steel industry about to take another major hit? Tulay Kalyon-Hasnadarolu, TRT World, London.
As Germans prepare to head to the polls, the second biggest issue for voters after immigration is the economy. As the cost of living rises, living standards are declining. One of the main reasons for this is the rapid rise in rents. According to a study, 17.5 million people in the country are now affected by poverty, 5.4 million more than previously calculated. 67% of people would like to see a rise in the minimum wage to €15 per hour. Shadia Edwards-Dashti reports.
High rents and a shortage of new builds is pricing people out of homes in Germany. Ahead of Sunday's snap election, it's a top issue among voters. Many young people are living paycheck to paycheck, struggling to make ends meet. Chris and his partner live in Berlin and have been forced to tighten their belts.
So essentially housing, like rent especially, is a big issue in Germany at the moment. The prices are going through the roof. Essentially, if I were to move in the same area here with a new apartment, my rent would essentially double. Not only did we not manage to save money anymore, we actually had to put more money into the joint account before the month ended because there was no money left.
Chris is by no means alone. Germany is a nation of tenants with more than 50% renting, compared to an EU average of around 30%. At the end of the month, people spend almost half of their income on rent. In the last 10 years, asking rental prices surged by 50% nationally, while existing rents grew by 20%. To make matters worse, when an apartment goes up for rent in a big city, hundreds of prospective tenants line up down the street to view it, scrambling to find a place to live. All of this is driving inequality as the less well-off struggle to compete in a crowded market. It's all playing into the hands of the AfD. With money tight and wallets empty, people want change.
People are more open to these radical parties and these radical ideas and things that they're saying because the politicians in power at the moment are not listening to the people's concerns. Yeah, and people feel like, okay, if no change is happening with these parties that have been voting for this entire time, then I vote for somebody else and I hope change will come. But that change might most likely not be the change that they want.
There is no quick fix. Germany needs around 800,000 more homes to deal with demand. Previous governments have made and broken such promises. Economists don't expect this election result to be any different.
It isn't economically attractive if you would be an investor to build a house, given the current economic situation and the low inflation rate, that you cannot refinance the investment. So that's part of the story why there is no more economic activity going on in the real estate market, and that doesn't fix the problem.
Regardless who wins on Sunday, revitalizing Germany's flagging economy is unlikely, but that won't stop voters casting their ballots in the hope change will somehow come overnight. Shadi Edwards-Dashti, TRT World, Berlin.
Paris is taking a significant step in tackling its housing shortage. Much like other major European cities, it's cracking down on illegal short-term rentals, imposing stricter rules and hefty fines. Lara Kilic-Arslan has the details.
Paris, the city of love, draws millions of tourists every year. But behind its postcard charm, locals are struggling to keep their homes. Around 67% of Parisians are renters, while just only 33% own their homes, as thousands of apartments now accommodate visitors. Rents have soared, pushing families out of neighborhoods they have lived in for generations.
Our goal is to put an end to this illegal business and bring these homes back into the rental market. 25,000 homes, that means 50,000 people can live in Paris again.
France's illegal short-term rentals reportedly generate about $1 billion a year for homeowners who rent out their properties. But Paris is fighting back. Government says fines for illegal rentals has just doubled, and Airbnb must now ban rule breakers or face penalties. As of January, new rules limit short-term stays to 90 days per year and require owners to register their properties. Illegal landlords now face fines up to $105,000 per property. However, Airbnb says the measures won't solve the crisis.
Our goal is to put an end to this illegal business, these entirely unlawful profits, and to bring these homes back into the rental market for Parisians.
Meanwhile, Paris isn't alone in this fight. Cities like New York, London, and Barcelona are also struggling with housing shortages fueled by short-term rentals. In Barcelona, rents have surged 68% in the past decade, while home prices jumped 38%. And now, the city has announced plans to ban tourist illegal rentals to bring balance back to the housing market.
The target is multi-property owners who have decided to turn it into a business. People buy several apartments, sometimes entire buildings, and convert them into illegal hotels. These are the ones being sentenced by the court. They are our targets because they are the ones, in effect, are depriving Parisians of housing.
Paris is cracking down on illegal rentals, hoping to ease the housing crunch. But will tougher rules make a difference? For now, the fight for affordable living in Paris is far from over. Lara Kılıçarslan, TRT World.
And if you have any stories you'd like our reporters to look into or any questions for our experts, you can send us a post on X at TRT Money Talks. And that is all from Money Talks for now. From me and the whole team here in Istanbul, thanks for watching. Bye for now.